Hey, everybody, welcome back. And well, you probably realized I was gone last week. I was out fishing. Do a little segment on that because we caught some large fish, and it was in Washington State, so it was a lot of fun. But really, at the end of the day, the question is, we have a 4% gain in pending home sales, and really, at the end of the day, why isn't that exciting? We're going to get into that. Okay, so even though we've seen a little bump in activity, and in fact, funny enough, these are August numbers that folks are talking about, and you're like, wait, George, this is October. And I'm like, I know, we'll get into that momentarily. But what they're talking about is as rates kept coming down, we actually started to see an increase. And in fact, we saw that continued increase in September with pending sales, and of course that translates into closings. But remember, as we go through our metrics, single family only, we're only looking at single family homes. I don't include condos in this. That's a different report altogether. Single family homes. So as we look at these numbers, you're going to say, hey, our market is actually doing really well. It actually is doing very well. And even though we've seen an increase in activity, or not activity, but actual inventory. And so when we have more buyer choices and lower rates, we're going to start to see some of that change. But let's delve into this. So as you can see from the chart there, and the big looks like a QRS complex for those of you that are in the medical field. On the left-hand side, that would be your heart rate that you see on a heart rate monitor. You can tell that we've got our 2020, which is the big one, through 2022, and then you see the big slide. And that big slide that you see there, well, believe it or not, that's actually when rates started to really bump up. Now, when I say bump up, we went up into the mid sevens. A lot of folks are saying, oh my gosh, we're going to hit 8%, and it's just going to be mayhem and bedlam, and everything's going to crash. And of course it didn't. We just hit our, again, situation normal, where we started to see a balancing of markets when we started seeing more inventory start to creep up after seeing the exceedingly low rates. But if I hide myself here and we take a look at it, you can see how they cycle with the Fed rate, which is, hang on a second, right there. We see the front and the end, and we see the rises. We know that the Feds during each one of those rises actually became a Fed rate, right? That was where they changed rates. No different than here. We see that little pop right there, at the end. But at the end of the day, our market locally is still doing well. Now, okay, so if we take parts of California, you take Florida, you take parts of Texas and Arizona, they're not doing so well. Okay, but that's not us. So let's pay attention to only what's going on with us. And when we talk about that, let's talk about some of the headlines that we're actually seeing. Again, the 4% gain is not that exciting because we're still more flat. Bottom left, home price growth may still be the lowest in years, but prices remain near all-time highs, and that is true. We've been seeing, and you'll see the metrics here later, that our inventory, even though the inventory has been creeping up, our pricing has been staying pretty flat. It's just a small increase. We're seeing this seasonal little bit of shift as pricing comes down. Normally, seasonally normal, and you're going to see that in some of the metrics here in a second. When we take a look at the upper left, hey, look at that. We're still at 6.34, which is really good because in the past, when I say the past, every time the Fed has dropped their rate, mortgage rates actually have gone up. And in fact, most people don't realize that in anticipation of Fed activity, the mortgage rates, which are publicly traded in stocks, right? You take a look at your bonds and whatnot, your mortgage-backed securities, you'll actually see that they will start building in rate drops and then transition depending on what the Feds do. This time it still went up, but not as much. As we can see in the upper one, we had our dip, and then it went back up, and now it's gradually heading back down again. All right, so when we take a look at what we expect, what we expect is not a whole lot. Probably just heading in a downward trend-ish, but that's not going to be a whole lot. If we drop another quarter in rate over the next 2 weeks, I'll be a little bit surprised. We'll probably see a little bit lower rate when we look at December. January, February, we could very well see some rates coming down. We still have a lot of unemployment numbers that are playing a big role on things, CPI, inflation. And then, of course, when we take a look at what's going on internationally, government shutdown right now, that has an impact on things. But the stock market and interest rates, they're holding fast. So we're not seeing anything crazy on that one, nor did we expect it. We kind of expected everything to be situation normal. Now, if we take a look at days on market, this is a big one right here, and super interesting. Okay, so if we take our average days on market, so right now, yeah, it's only a couple of days into this, but we're at 50 days. But we have been at around 48, 45 days on market, and that is about 10, 11 days more this year than we were at last year. Now we have more inventory, and that's going to play a role into it. Interest rates have just, been coming down since about August-ish, and we've been seeing some of that buyer activity, but still we're not seeing a ton of lessening of time on market. Now you might say, oh my gosh, George, that must be bad. No, actually it's seasonally normal. It's normal for it to start popping back up. Yeah, we've been, most of the year we've been between 6, 7, 10 days more than what we were at last year. Okay, whatever. It's not a huge thing. Pricing, it just tells you how much more important that really is. And that's really the nut at the end of the day. Don't overprice your home. All right. So when we come back and we take a look at the actual sales price, we're down about 1% year over year, 2% for what we saw last year at this time. So again, not super crazy. We take a look at the Northwest MLS. Now this one's a little bit different. When I say it's different, I was a little surprised by the back on market being a little bit lower, but price reduction. So if you see here, we've got 952 homes that came on market, okay, of the average of the last 7 days. Well, that's really good. The howevers, we also had 923 price reductions. Okay, now granted, we have 17,000, 16,000 homes out there. It's not that big of a deal, but that's still a much bigger number than what we ever really want. As far as pended, this is important. So remember, we had 932 that came on market, and we had 1,093 that went off market, went under contract. Well, that's super important because that just, again, tells you that we're seeing more homes coming off the market that are coming on. Even though our inventory is up, we're up at about 3.2, 3.1 months of inventory, where most of the year we've been at around 2.5 months, 2.6 months. And so we're getting to that for that pendulum, right? And this is the seller side and this is the buyer side. We used to be over here on the seller side and it kind of swung and it was in the middle. We're just ever so slightly, I think, listing more towards the buyer side, away from the seller side, and again, seasonally normal. But that's a super important thing to keep in mind as we take a look at our numbers and as we start rolling into the rest of these metrics. Because as you can see here, we're at 3.1, whereas last year at this time, we had 2.5 months of inventory. Now you might say, George, what the heck does that mean? That's super simple. All right, if I have a bucket, okay, and I call this bucket the Northwest Multiple Listing Service, right, the MLS, and all of the agents put their listings in this bucket, okay, and then I put a lid on it. They say 4 to 6 months is a balanced market. 4 to 6 months of inventory in this, not adding anything else to it, is a balanced market between buyers and sellers. Now, over the last 10 years, really 2 to 3 months has been kind of our balance, right? That has been pretty consistent. We're at about 3.1 months. We're getting towards the higher side of that. So I'm saying that pendulum is swinging just a little bit towards the buyer side, and buyers are going, yay! And of course, then, the sellers are. So when you keep that in mind, again, pricing is super important. And well, there you go. All right. So as we roll in, remember, this is real-time information. Okay. We're not talking about August. We're barely even talking about September. We're talking about today. What's going on? What is happening moving forward locally here so you can make a really good decision, right? Yeah, there you go. All right. So let's talk a little bit about the Northwest MLS. What is going on? You can see from the green lines there, you can see that we've got a little bit of an inventory increase. Notice the blue line, that's the new on market. And then, of course, the red line down below, that is our sales. And, well, guess what? Our sales actually are doing pretty good. When we come over here, we start taking a look at the year-to-date and month-over-month. In fact, let's blow this up for you. Hang on a second here. Look at that. So for the month of September, we were almost 14% higher in pending. And of course, we had an increase of 5.3% increase in solds. Now, remember, this is super important to understand. Solds take on average 30 days to close. So when I say it takes an average 30 days to close, we're looking at what happened last month, right? So these numbers are the pending sales in August. The numbers that we start seeing in October as we continue through the month, those are your September closings. So you're going to see some pretty good numbers. Situation normal. That's why there's always that little bump in increased activity when we take a look at the month. You say, hey, the summer goes down, all of a sudden we have this bump, and then it goes back down again for November, December. And that's because you're seeing September sales as that bump that we typically view in October. Just remember that. It's super simple. So as let me take myself off here. Let's get back to the chart. As we take a look at this, even year to date, we're up 2.1% on pendeds, and we're up 1.5% as far as solds. Now, here's the thing. So I said it wasn't crazy. I said we weren't going off the charts. We are almost flatline. That's not, we're not going down, but it's just, okay, we're just kind of holding our own. 2024 and 2025 very much look the same. We're going to see some seasonal shifts. Don't panic. Again, sellers, be super, super conscientious about price. And remember, from this point moving forward, any buyer that looks at your home, make sure that you are exercising all opportunities with them, because only the serious buyers come out between now and really the end of January. So keep that in mind. All right. So as we roll along, let's take a look at our pricing here. You can see that our year-over-year pricing is up $9,000 at this point. And then, of course, when we take a look at September and October, pricing again is up a little bit. Situation normal. So when we take a look at new construction, now new construction is absolutely doing, actually, all things considered, pretty well. Okay, even though we're down 809 homes. Okay, let me blow this up for you guys. Even though we're up, we're down 305 homes. I don't know where I got the 8 from. 305 homes from where we were at last year as far as sales. They have been gaining ground and gaining traction each and every month. You can take a look at the end of September. Sales were up almost 17.5%. Sales were off just 105 homes. And the real important element that you got to remember here is that, yes, they have more flexibility with incentives. Actually, they really don't, but most people perceive that they do. Any seller can offer the same incentives that a builder does. They just choose not to. Don't ask me why. But anyway, they don't. But all things considered, we look at these numbers, they are just, again, just that steady Eddie, that Charlie the Choo-Choo or whatever it is, just going up and they just keep fighting the fight. And they're doing a good job. Yes, we are starting to see a slowdown on inventory. That is not unexpected when you take a look at that. That's where the 305 comes from. We have 305 homes less this year than we did last year. Again, situation normal. Why? Because as the market started to cool a little bit, and the buyers started pulling back a little bit, they slow down production, and they will follow that same mantra. When the market starts picking up, they will increase production. But don't think that buyers aren't taking down land, because they are. We're working on a few projects right now. Builders are still taking down land and doing projects because, well, they can't stop the beast. Anyway, there you go. All right. So as we roll along, let's take a look at a bigger number here. You can see that we have an upswing in the solds, which is absolutely situation normal because of the lower rates that we had. And then you piggyback the builders buying down rates. They're doing a great job. Pricing year to date is up 3.1%. That's actually very good. When we talk about the month of October, that's a little early, but still we're looking at just shy of 20% year over year, which includes part of September. All those numbers were actually rolling really, really well. So just keep that in mind. And then when we talk about foreclosures, foreclosures, super interesting, right? Let's talk a little bit about foreclosures. All right, so there's a report that came out that a couple of real estate firms put out that they were taking off of sites. So remember, there's this thing called there's lies, there's damn lies, and then there's statistics, right? And they're like, oh my gosh, foreclosures are up. It's crazy. Foreclosures are up. And I'm like, well, not really, just a little bit. I mean, heck, we only have, I think, 740 homes this year. And you might say, well, that's a lot. Well, that's 1 in 4,600 and something homes. There's 3.3 million homes in Washington State, and we had 740-ish to the year. That's pretty small. But if you take a look and you break that down to certain counties, well, like Thurston and Cowlitz, those are in Lewis County. Those are the ones that have been taking the bigger hit. But because King County is bigger, they isolate that one back down, and they derived a number that they thought was, like, oh my gosh, look at the statistic here. And actually, it's nominal. But hey, if it sells their desire to take more dollars out of your pocket for, foreclosure protection or whatever they are calling it for every transaction, which is it's just another way for them to take money out of your pocket, because, well, one home in every 4,700 and something, or 740 out of 3.3 million homes, that's a pretty small number. I'm just saying, I'll get off my soapbox. Foreclosures are not that big of a deal here. We are not the other countries. We are not South Carolina and Illinois, which have the highest foreclosures historically. California, Florida, Connecticut, and I think parts of Texas. Those are the ones that have consistently, in the last 10 years, have always had the highest. We're super low. We're way down on the list. But anyway, it just helps with the narrative. So keep things in perspective. We have seen great appreciation. We actually have a -4, I think it's a -0.43% of foreclosure rate, which means that we are actually in a stable and more stable business environment, economic environment, which prevents foreclosures. Keep that in mind as you're looking at them. Foreclosures in our area are not a great investment because you don't get the discount. Now, yes, because we have so few of them. In fact, if we go back to the chart, I think we have a total of 110. Oh yeah, look at that. We had 110 throughout 3/4 of Washington State. That's pretty much peanuts, right? According to this, we've only had 376 of these properties year to date through our state. That just doesn't mean that not every property that goes into foreclosure goes through the foreclosure process. Okay. Here we have 376 that went through the foreclosure process, went on to the multiple listing service, and ended up getting sold. Okay. Others that could cure, or they get the home sold beforehand and they don't go through the foreclosure process. So that's just super important to keep in mind. All right. So when we take a look at this, look, we have 55 more homes that sold year to date than we had last year. 81 pended more than we had last year. That's pretty much peanuts, right? Look, they do paint, carpet, and vinyl. They get it out on the open market and they sell them. We don't discount. We don't have a lot of foreclosures here. So keep that in mind. So with that being said, if you have any questions, put them down below. We want to hear from you because, well, we love answering questions and there's no strings attached. If you would be so kind, do us a solid, hit that subscribe button or at least hit the bell and let us know that you like the channel. Let others know there's no marketing here. Let the others know so they can get some really good information so they can best make a business decision for them and their families. In the meantime, have an absolutely beautiful day. It's a little wet outside, so stay safe. Enjoy your October. Take care.